What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and yeah, let's get straight into things. So as you know, today PPI caused a massive expansion towards the downside, so we've started to move down towards our south side target. Now if you've been watching my videos this week, you'll know that I wasn't expecting us to trade into our trade towards our south side target so early in the week. I was expecting more upwards price action first. However, nonetheless, we've now had some displacement. Now, this is the first time we've seen displacement in like the past week and a half, so it's really nice to see some final expansion. And now is the time we can start thinking about looking for real nice setups and thinking about how we can start getting in on potential trades. So here's the weekly. I've cleared my charts just because I thought it'd be nice to start fresh. And you'll see how we've expanded lower. We're running through this wick. Wicks are ranges too, by the way. Wicks are gaps too. And you can see how we just got below that 50% level, which is quite significant. So what I'm going to do is I'm going to bring our attention to the 25% level and the 50% level of this. And what price should now do is treat these as resistance because we're below that. And as far as I'm concerned, we are bearish. So what's happening right now? Well, first of all, we're moving in the direction which we anticipated this week to move in because we wanted to see us reach here as our final target. The only thing that's thrown me off is the fact that it's only Tuesday and we're moving this fast lower. So what does that say to me? Well, it means that it's likely we will probably see a continuation lower for a bit. However, I wouldn't be surprised if we saw like some kind of reversal or retracement, deep retracement on maybe the Thursday or Friday, or maybe even on CPI. So I do believe CPI is tomorrow as it's Wednesday. Let me double check. I'm pretty sure I'm right there. Yeah, so CPI is tomorrow on Wednesday. Now, that means we can expect a lot more volatility. Like I said, the fact that we've expanded lower already, I wouldn't be surprised if we did see a continuation. Ideally, we can reach the south side liquidity target because that was my weekly target in general. So I'll be thinking that price should be continuing to draw there. And then, like I said, the fact that we're moving here so fast and so early on in the week, I wouldn't be surprised if Thursday gave us a potential reversal. But I'll talk more on that as we drop to the lower time frames. And yeah, overall right now, I'm going to be looking at the 50% level of this wick because we're below it. 25% level, if we do want to retrace into it, I highly doubt we're going to be doing that for now. And then just looking at potential targets on the south side as to where we may be reaching for. So here's the daily. Absolutely gorgeous day. And when I say gorgeous, why is it gorgeous? Because look how much consolidation we've been in for the past 1, 2, 3, 4, 5 days, you know. So it's nice to finally see some clear displacement. And like I said, this is where we can start using price to help frame potential setups. Nonetheless, our sell side target is still below here. I would like to think that price can draw down there, and I would like to think that CPI can help send price lower, especially with how heavy we are and the fact that we're likely going to be closing on this low. So in terms of the daily, well, this is now a bearish order block open. Why? Because these 3 up close candles create bearish order blocks. So as soon as this candle traded through that low, it permitted this to be a bearish order block. So we can use that now and expect resistance at that level. So we'll get that marked out as a daily bearish order block. And then we've also got 25. This is a weekly 25% level. And also welcome to all my new subscribers. I know I've got quite a few this week, so welcome. Make sure to join the Discord, everybody. And I do want to do more videos based on like actual trading. It's just time, guys, time. I don't have much of it, but nonetheless. Oh, this is the 50% level. My bad. And then we know that this is our south side target. So let's now drop down to the 4 hour, and you'll see how price obviously dropped based off the back of PPI. We have a breaker, high, low, higher, high. Price traded into that here, creating an entry opportunity, and then carried on trading lower. So you can see how we're likely gonna just consolidate a little bit around that 50% level. I would like to think it will hold itself in terms of providing resistance for price, and then I do want to see a continuation lower, like I said, towards these sell stops below here. We do have a clear gap right here, so let's drag that out. And the fact that we've traded through it and below it means that it should provide enough resistance for price if we are to return back up into that. So let's now go to the 1 hour, and you'll see some beautiful displacement, guys. And I do think that tomorrow will be a classic day in that we can create the high during London, and then, you know, see expansion for the rest of the day moving into CPI, so that we can start reaching for these lows. Because overall, this is where my draw on liquidity is. It's just like I said, the fact that we're running there so early in the week is interesting to me, because if we get down here, say off the back of CPI, I wouldn't be surprised if we saw a massive reversal on Thursday moving into Friday, which is completely fine. But yeah, it's just quite an interesting way of delivering. So let me get my daily dividers up one moment. So here you can see our price ran straight lower. Here's a beautiful setup right here at 8.15, just before PPI. So we have a breaker right here. This last down close candle, this would have been a setup. You would have went short as price traded into that, put your stop loss above here, and then we would have been targeting previous lows, such as these relative equal lows down here. And then there was another setup that formed at 11 o'clock, classic for price, and then we've been continuing since. So again, moving into tomorrow, I do just want to see a continuation lower. This 50% level, I am looking for it to hold price, as in I'm not really expecting us to come back above it, purely because price is clearly in a rush to get somewhere. Don't get me wrong, we will get some kind of retracement eventually, but right now you can see how we're clearly very bearish. So we're looking for it's clearly on a hunt for sell stops. So in terms of our drawn liquidity, I am looking at these lows. And then again, this is a massive weekly fair value gap that I would like to think we could get into, but you know, we do still have quite the way to go. So don't be fooled thinking that, you know, I wouldn't be expecting any kind of reversal for now. We're going to remain bearish until proven otherwise. And moving into London, again, I do want to see some kind of rallying in London. So between 2 and 5 a.m, I want to see some kind of rallying, ideally to that daily bearish order block level that we have marked out, and then I'd like to think that we can trade on lower. However, depending on how Asia trades, that's going to say a lot, but generally speaking, I am expecting a classic day. What will help us with this as well is that the Asia range between 7 p.m. and midnight, if we look at the high and low, I want to see a range get created between these times here. I'm looking for a range to get created, and then once we're above that range in the new day, I'll be looking for shorting opportunities on dollar and longs on the pairs, expecting price to then trade on lower for the rest of the day and moving into that CPI. But you know, CPI can be very dangerous, so we need to keep that in mind. You can also see we have all of these other high impact news events, which is why, again, we may find that price just zaps down there and then starts to retrace straight away. It may be like a two-stage delivery in terms of it may spike down here off the back of a wick and then start trading higher, especially with high impact news just yesterday as well. So we do need to be careful of the volatility, but generally speaking, I'm looking for this weekly fair value gap to continue to get drawn to. So that's going to be everything on dollar. I hope that all makes sense. Let's head over to GBP, USD. We'll start here on the weekly as well, just to see where we're trading up to, and you'll see how we've finally had the expansion to the upside. Again, we've been anticipating this. If you've been watching my videos, we've been waiting on this. It's just that it was a matter of when, and I was expecting it to be later on in the week. It just happens that they wanted to do it now, which is completely fine. Nonetheless, we've now traded above a weekly fair value gap, meaning that this should now act as a bullish fair value gap. This is what we call an inversion fair value gap. So this is going to help us with trading setups if we are to retrace back into that. Our next goal is now going to be here. So definitely go check out Sunday's video, because I did state here's my first target in terms of buy side, and we've traded through that now. We traded to it and through it, meaning that if price retraces back to it, we're expecting it to provide support, which is completely fine. So we'll get that marked out like so. And then our next target will simply be this fair value gap. Can we now trade into this one in line with dollar trading on lower? So that's how I'm looking at pound on the weekly. Let's drop down to the daily, and you'll see this massive day, absolutely gorgeous day. So again, any kind of retracement into here, I'll be looking for setups, especially around this high right here. I like the look of that. I'll be looking for setups to potentially go long off, with the expectation to start trying to fill this weekly fair value gap. This is also a breaker. Why? Because it's the last up close candle before the down move on a daily basis as well that we've then broken through. So we've got a low, a high, a low, and then price is delivered to the upside. So we're looking at this as a breaker. Let's go to the 4 hour, and you'll see I've marked those highs out. We were expecting these highs to get taken. Again, I wasn't expecting it today, but it's did it. It's done it, sorry. So we need to simply adjust to that. And any kind of retracement in the new day, ideally in London, I'm looking for London to offer me a discount for me to look for potential longs to again target this premium right here. And then there's relative equal highs above here, but I'm not too worried about that for now. Right now, I'm just worried about, can we fill this fair value gap in? So let's go to the 1 hour real quick. And you can see we just consolidated. This is very typical, very classic price action, guys. It's kind of consolidation at the end of the day. Obviously, we're going to create an Asian range, and then I would like to think that London will dip lower, maybe into this fair value gap, potentially fill it, and then use that to then trade on higher and permit us to buy in potential longs without expectation to run up into this buy side liquidity. So that's going to be everything on pound. I hope that all makes sense. Very interesting. And this is why, this is an example as well of when, this is an example of why you don't always need to be in the initial move. So if you didn't manage to trade this, don't feel like you've missed out, because what there's going to be a lot of people doing is people are going to be chasing price, and then they're going to get thrown off in the new day when the price starts retracing, and they're going to be like, oh no, it must be falling. Like, we wait for displacement. And if you remember yesterday's video, I was stating I'm waiting for displacement. I want to see movement. I'm waiting for movement, and then I want to think about trading. What's this? This is displacement. You can see how fast price is running. Look how large the candle is, and you can see movement. You can see a run to liquidity. So now that we've had this, we can think, okay, where can we enter? Because it's obviously going to offer us some kind of mitigation for us to then enter safely and think about pairing potential longs for the buy side. So this is a clear willingness to want to go higher. Where do we want to go to? Weekly fair value gap. There's a massive imbalance there. How do we want to look for setups? Well, we're going to look for previous highs on the south side of the curve and previous consolidations like what we have over here, because you can see that lines up nicely with our inversion fair value gap. This black box, remember, look how that lines up pretty much, well, really nicely with that consolidation. You know, so we need to take that into consideration. So that's going to be everything on pound. Obviously, I'm making it easier. It sounds easy. It's easier said than done, but genuinely, that's how I'm looking. Like, this expansion to the upside didn't catch me off guard because we wanted to see price reach to the upside this week. It's just that we wanted to see it later in the week. The fact that it's done it now means that we can simply get into adjustment, and then we can anticipate now Thursday and Friday for the potential of a reversal. So that's going to be everything on pound. I hope that all makes sense. Let's now head on to Euro USD. We're going to start here on the weekly as well. Beautiful expansion, and you can see we're running towards the highs just as we anticipated. Remember, watch my weekly review if you haven't already, but I did call these highs to get taken because that was what I wanted to see get taken. Nonetheless, the fact that we're so close to it now, and we're already and we're only on Tuesday, guys. Now I'm looking at this rejection block level right here, so I want to see, can we trade into this range? And at this point I am going to be looking at the 50% level. So let's get, I'm not going to mark out the 50% level as a target because generally speaking I just want to see, can we even get into here first? Similar to dollar, I'm doing the same thing. I'm going to split this wick up. Why? Wicks are gaps too, so we want to split up into quarters like so, and then when price is retracing, we're expecting these levels to help provide us support. But honestly, you don't understand how like relieved I am that we're finally getting movement, because it makes it so much easier to frame setups. Now that we've had displacement, we can really start homing in and getting in on some nice setups and nice trades in general. So let's go down to the daily now, and you'll see that beautiful expansion. Again, we're looking at these 25% level, 50% level. I'm happy for price to retrace back into this range. And we can even look at this long wick. Look at the 50% level of that. And then as we keep dropping down, hopefully we can home in on a point where we want to see price retrace before thinking about how it's going to run up into that premium. Remember, this is a rejection block level on the daily, or was it weekly? I think it was weekly, wasn't it? And then we have a nice fair value gap up here on the daily as well to trade. It'll be weekly, wouldn't it? Yeah. So sorry guys, I'm talking very fast. So this is a weekly rejection block. And then this is our weekly fair value gap. So now let's go down to the 4 hour, and you'll see beautiful. Again, we do have a break here, low, high, low, low, but price isn't going to retrace price isn't going to retrace all the way back down here. Why? Because it doesn't need to. The lowest I'd expect it to retrace, if it's going to retrace deeply, will be this 50% level. There's also a bearish order block here, which would act as a bullish order block. However, even that's quite deep for price, and I wouldn't be surprised if it only retraced slightly in London, and then we did just see continuation and run up to that weekly rejection block in line with dollar, again ideally trading on lower and trying to reach for its sell side targets. Nonetheless, let's go down to the 1 hour, see what we can find. We have this low right here. Price may not want to take this low out before we trade on higher. So this wick right here that we've created, It is typical for price to come down, grab stops and continue on higher, but it doesn't necessarily need to do that, especially since it's a 25% level off that wick. So we can draw this out, and what we may find is that price may find support inside of it. So we may find that London may offer us a discount inside of it, and then it finds support and it helps it trade on higher, where towards our rejection block levels and our premium PD arrays. Let's drop down to the 15-minute, and again you can see that massive wick. But again, I'm not necessarily expecting this low to get taken right now. It doesn't need to do it. We're still bullish, so we shouldn't be thinking about lows getting taken. It will come for this once we have our reversal, which might be on Thursday. But generally speaking, we're looking to see, can it provide support. In fact, let's look at the same wick on GBP and see what we find. So we don't have as much of a wick on GBP. We do have a down close candle though, and we do have bullish order blocks here. So we may find, has that been traded to? We may find that GBP may not even take out these lows. It may stay in its range and just continue higher. So this is just food for thought. Like, again, we don't need to see a deep discount. We just want to see some kind of drop below the midnight open price so that we can look for potential longs to reach our premium targets. Let's look at dollar real quick. We've created again a nice big wick, so let's drag that out and we'll see how price treats it, because again we still have the whole of the Asia range. So long as we stay below it, if we do retrace back into that during the new day, I'll be looking at that 50% level first, and if it turns around at it, then I'm like, okay, cool, we're probably going to continue lower in line with the weekly 50% level. Let's look for potential shorts, longs on the pairs, simple as. Any higher than that, then I'm looking at these ranges. But generally speaking, after seeing that wick on euro like that, I'm thinking it's probably going to help hold price, especially since it's traded down into the 25% level off a massive wick here. Dollar's traded into a 50% level off a weekly wick, which is very significant. And then GBP, what's it traded into? Well, I guess it's kind of using this range right here, isn't it? GBP is the one that's been misbehaving anyway. But I hope you see my point. It is very complicated, guys, don't get me wrong. And although it's not specific, I know exactly what I'm looking for as we enter London specifically tomorrow morning. So I'm going to be looking for that. But yeah, nonetheless, I hope that all makes sense. Don't forget to smash subscribe, drop a like, drop a comment, join the Discord, join the mailing list, and I'll catch you in the next one. Peace.